GBP bulls are here to stay. Guys, I hope you're well and truly lit. I wanted to provide you a key fundamental and a brief technical overview of the pound right now and why I expect GBP to remain elevated versus most of its peers. Now, a question came through in the community saying, oh, it seemed inflation had called. Why is GBP still pushing to the upside? Let me break this down. I'm going to share my screen and we're going to talk about the key fundamental points right now that's supporting the pound to the upside. Okay, so you would have seen this pop to the upside for GBP. Okay, this is versus obviously the dollar. You can go and look across the board, which we're going to take a look at in a moment anyway. Look, GP CAD, same thing. GP Aussie, this pop to the upside. And that's all because, all right, and if you look at GJ as well, okay, nice push to the north there with GJ. You look here, all right, really need to listen in. UK CPI on a year-on-year, it's on an annualized level, is higher. Okay, I know what someone was mentioning about it cooling. Yes, in comparison to the previous of 3.4%, but it's still higher than what the markets were expecting. Remember, if markets are expecting something and then we're out of line of expectations, you're going to see a reaction, okay? You bar this previous reading and focus on what the markets are pricing in. So the fact that this inflation's still running hot, still running higher than what the markets are expecting, higher than what the Bank of England would like to see, this is supporting the pound to the upside. And even on the core, 4.2%. Remember, with this annualized inflation number, the Bank of England wants inflation down very close towards the 2% mark for ultimate price stability. If it's not there, they have to keep interest rates higher for longer. We keep interest rates higher for longer in order to bring down inflation. Because remember, if interest rates are higher, it's the costs. Costs for consumers, costs for businesses remain high. Remember, it's cost to borrow. It's also the rate of return a foreign investor gets, but it's the cost to borrow for a consumer. It's the cost for businesses. So the only way that we bring inflation down is keep costs high, so then people are less reluctant to want to go out and businesses to go and stimulate the economy. Does that make sense? Then inflation will start to cool. But the fact that this is still higher, coupled with something very important yesterday, okay? And again, let me just clear some confusion. Look at yesterday. The claimant count changed. The amount of people claiming unemployment dropped down to 10.9 thousand in this latest reading. That's good. So we've got less people claiming unemployment benefits. If we've got less people claiming unemployment benefits, that is inflationary because we've got more people still out spending, stimulating the economy. They're in work, okay? And then the average earnings, 5.6%. All right, higher than expected of markets, what markets are expecting. They wanted to see wages cool down. Okay, they wanted to see a disinflationary effect on wages, but we're not seeing that. Wages are still high. If wages are high, what do you think is going to happen to prices of goods and services? They're going to remain high because people getting paid more, they're going to go out and spend more money, shopping, stimulate prices by buying up all these goods, by using all these services. So what do you think the Bank of England are thinking? By the way, ignore this unemployment rate. This is just, this only popped higher. I saw there's questions in the community around that. This only popped higher because the ONS, who gather the data for the UK, there's some changes at the moment in how they calculate the data. It's a bit of a mess right now. So that's not reliable and that's probably not accurate. And it's at the bottom for readings, yellow. Okay, these are the important points. Okay, unemployment claims is still inflationary. Average earnings is still inflationary. So Bank of England are thinking, man, inflation's not coming down. So we're not going to rush to cut rates. We're going to push back rate cut expectations further later on this year. After the summer, same sort of thing for the FOMC, potentially start entertaining rate cuts after the summer. But right now, no. Everything's still inflationary. Does that make sense? So that's supporting the pound to the upside right now, guys. Now, obviously, GBP, like GU, is a bit more of a trickier one to trade because we're dealing with the bullish dynamics of the dollar right now as well. Obviously, structurally at present, we are to the downside, but I just wouldn't over entertain trading GU for the time being, in my opinion. You'd pick your pairs wisely. You go and look at other potential currencies that GBP is versus. Like here, let's take a look at GBP CAD as an example. It's just an example for you guys, all right? I'm just looking at this on a naked chart at the moment. You can see, obviously, a nice pop to the upside. Yesterday, we had a cooling in Canadian inflation, right? The Bank of Canada are nearing a rate cut. Inflation's coming down towards where they want to see it. And they actually are gearing us up for a potential rate cut. So this is a good pair, right? GBP remains inflationary. UK remains inflationary, whereas CAD was starting to see signs of disinflation. CAD labor market data as well was worsening. If you look at the previous CAD jobs data, right? Look here at the employment change. Look, less jobs, minus 2.2 thousand jobs being removed from the economy. Unemployment rate, reliable, popped up to 6.1%. Not good. So look here with GBP CAD as an example. This is just an example for you guys, right? We've got a bit of an inverse head and shoulders there. Look, if I was to put a trend line here, you guys can see it, right? Left shoulder, head, right shoulder. We've had a bit of a breakout of a flag here for GP CAD, right? Look at that push to the north, okay? Breaking out there, breaking out that neckline. Either way, there's resistance there heading into the 72 area, 171.90, 172.00. And obviously now we've got room to potentially move to the upside and go and challenge these highs here of the year so far. Okay, if we go and look GP JPY, okay, obviously be careful with yen pairs at the moment, but same sort of thing, right? Structurally, if you look here, we are very much structured to the upside. Okay, we're printing higher highs, higher lows. Look, doom, 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 doom. Obviously got a bit of consolidation period at the moment. Found decent demand there at protecting the 90 area, trying to break out of this range as pennant here, making way for further potential upside. Okay. Obviously, if you look here as well, let's go over to GBP Aussie, right? Trending to the north at present. Got this daily wick, which was likely to fill today. You know, we've got the RBA, who I think the Bank of England are going to be keeping rates higher for longer in comparison to the RBA, getting a breakout of a bit of a channel, breaking out of structure there, looking to go and challenge these highs at 195. So, you know, when I'm saying pick your pairs wisely, analyze everything. Okay, analyze the major thing right now. What did I say last year to you guys? I said it to everybody well and truly before 2024. I said the theme of this year is the rate cutting cycle. Who is cutting faster? Their currency will lose edge the quickest. That's what markets are trading right now. Central bank expectation, guys. So don't let that go over your head tops, and keep that in mind when you are looking to conduct a little bit of fundamental, a little bit of technical analysis as well. Couple them together. It's a powerful tool, guys. I've gone over this in detail in my course. Okay, which I know people are smashing it by. We're seeing a number of payouts, seeing people passing challenges, which is beautiful for me. Obviously, I only want serious people going and take that course because there's a serious amount of value in there. It's hours. It's actually the previous boot camp. It's hours there with PDFs. So I only want people that are serious to take their fundamentals to the next level. It's catered from the very basics up and towards the advanced level, the way I think. But again, only serious people get involved in that. All right, guys. Other than that, have an amazing rest of your week. Stay lit, stay blessed, and what should we do? Let's get it.